Hi, I'm Keith Richards, Portfolio Manager, Value Trend Wealth Management, WorldStar Securities. And today we're going to talk about the TSX 300 Composite. It's May 26, 2015. What I'd like to talk to you about is a couple of things. First of all, I'd like to talk a little bit about the composite composition itself. And that is, if anybody's followed my work over the past few years, you will know that the TSX 300 is probably one of my least favorite indexes to chart. And the reason for that is because it is a capitalization-weighted index, which by itself isn't a huge problem if done right. The S&P 500 is the same makeup. However, I believe that the TSX folks have never really done it quote-unquote right. Case in point, back in the late 90s, Nortel networks made well over a third of the TSX Composite Index. In other words, one stock out of 300 stocks basically made up over a third of the weighting in that index. So it's whatever is hot tends to be the TSX 300's focus. Now, I think they've improved it a little bit, but you will still see that if you were to examine the internals of the TSX 300 Composite, even today, you would see that it's still concentrated in three sectors, and that is financials, which comprises of banks and insurance, metals and minings, and energy, which is oil and gas-oriented companies. So it's basically 60% weighted in three sectors. So it's not quite as broadly diversified as an overall macro indicator for the Canadian stock market as one might think. So with that aside, let's take a look at the TSX 300. And what you can see on the chart today, this is a weekly chart, and you see I have drawn the lines for what appears to be a rising wedge. Now, a lot of technical analysts believe that rising wedges are bearish. And I want to just dispel that myth a little bit because in practical experience, I've been trading for 25 years, the rising wedge does not necessarily mean the market is going to go into a period of bear market returns. In fact, it's relatively neutral while in the wedge. The market's going up. That's usually a pretty good thing. But when a rising wedge breaks down, as we can see the TSX appears to be doing right now on the weekly chart, now it's only broken down by 1 week, but if the rising wedge breaks down out of the wedge, and particularly on high volume, then you can often be set up for a very bearish movement. And Thomas Balowski, author of the Encyclopedia of Chart Patterns, notes that if you get a breakdown from the rising wedge on volume, you have a very low failure rate. In other words, it is quite predictive. He suggests in his work that you only see a failure rate about 6% of the time, at least over the wedges that he studied. So, as I said, a wedge by itself is not necessarily bearish, but a breakdown under the wedge quite often is. Now, let's take a look at some of the indicators. This is a weekly chart, so we're looking at a little bit longer period of time. But you'll see that on the weekly chart, the momentum indicators that I look at, stochastics, which is a shorter term moving momentum indicator, is definitely pointing down, looking kind of bearish. So is RSI. Comparative strength versus the S&P 500 is at best flat. MACD, on the other hand, which is a longer term momentum indicator, it actually measures the movement between two moving averages, is relatively pointing up. However, it looks about to do a bearish crossover on the weekly chart. Those are all neutral to bearish indicators. However, one of the most important indicators that I watch is money flow, and that is volume flowing into the market on positive days versus negative days, and then plotted cumulatively. And you can see this line at the bottom. Accumulation distribution is most definitely trending up. So that means that there is plenty of money that has been pouring into the TSX Composite. So that can be a positive thing, at least in the interim. So let's take a look at the daily chart really quickly, and you'll see, ignoring the momentum, or sorry, the moving averages, because it doesn't reset it for the moving averages I like to see. You will notice that a lot of the short-term movements on the momentum indicators, such as stochastics, is pointing up. RSI maybe, or overall pointing up. It's just recently hooked down, but generally the trend is somewhat up. There is some warning signs on this little hook down we see today. MACD, which was trending down, is attempting to make a hook up. Now, after today's movement on May 26 to the downside, that may not occur just yet, but it's something to be watched. Meanwhile, on the daily chart, accumulation distribution, money flow is still pretty positive. So for the time being, I'm going to give the TSX a neutral weighting, or neutral rating, I should say. But I'm going to look at one other chart, and that is a seasonal chart. Some of the viewers may be familiar with equityclock.com. These folks chart all kinds of seasonal patterns on sectors, commodities, indexes, and even individual stocks. It's a fantastic site and it's free. So I recommend taking a look at this for an overall feel for seasonal patterns. And you can see on the TSX, basically from the beginning of June, which we're coming into very shortly, through till September, the market is relatively neutral, somewhat choppy, but neutral. And you can see into the mid to latter part of September, it's often very bearish for the TSX. So this rising wedge that we were just taking a look at on the TSX, combined with sort of neutral looking momentum indicators to slightly bearish on the weekly charts, and the seasonality, which appears relatively benign for the next 2 or 3 months, probably spells out a condition, at least for that composite, of neutral bias. So again, my bias is that the TSX is not a perfect index. It's a little overweighted in 3 sectors, so treat it accordingly. But the overall look of the TSX is neutral to bearish at this time.